Well, good morning, everyone. My name is Roger Scott, and I'd like to welcome everyone to the midweek edition of the Roundtable. I have my usual co-host, Jeff Zananari. Jeff, how are you doing today?
I'm great. Good morning,
Good,
Roger.
good to hear from you. I haven't. It's been a very interesting week since we've talked last time.
Sure has. Never a dull week these days, huh?
No, never a dull week. So, what are you seeing? What's the big opportunities, threats? What are you looking at these days?
I'm just in awe of what's been happening with there's something that I noticed recently that's been happening that's extraordinary, and nobody's talking about it in financial media. We're seeing high yield corporate bonds yielding their lowest ever. They're having a four handle for high yield. Junk bonds are yielding like in the 4%, while treasury yields are going back up, which is crazy. That's usually working in reverse. Treasury yields go up, junk bond yields are supposed to explode because the reason a company is a junk bond, for those people that don't understand at home, is because they already have a lot of debt. They have a lot of debt. And so if they have to pay more for their debt from banks, from which gets passed through from the treasury, et cetera, it's harder for them to survive and subsist as a company. And so I'm just scratching my head because I think this can't go on for too much longer like that. One of those pricings is incorrect, so to speak.
Right.
Either corporate bond rates have to explode, which means that the high yielding bond ETF, high yielding bonds would go down a lot, or treasuries yields need to come down a little bit. I feel like treasuries are going to stay kind of high-ish, not super high, but around this range.
Mm-hmm.
But I feel like junk bonds they're totally divorced from the fiscal reality.
They are. I could not agree with you more. And a lot of people would also argue that the stock market, in light of what we're seeing right now, is also grossly overbought in light of that. But yeah, stocks are in their own little territory. They're like in their own little cosmic universe right now. It's really, really interesting how you have the stock market and you have the rest of the economy. And I think all that goes back to the exact contradiction of how the Fed does not or should not take the stock market into consideration when making any kind of policy, right?
It's all they think about.
Of course.
It's not, as Vince Lombardi, the great football coach to the Packers, once said, winning isn't the only winning isn't everything. It's the only thing.
Right.
And for the Fed, the stock market's the only thing.
It's just
the only thing.
It's the only thing. And I just love how they're supposed to be completely impartial and completely not be, come on, let's be real here. If the last 2 years you haven't figured that out, all these moves the Fed has been making, then what else is there? I mean, look at Yellen, look at these accommodative markets we've had back in 2008 and again right now. There's a reason for that, folks. But I agree with you.
You could argue that people are freezing their tuchushes off in Texas right now because of the Fed, because of the fact that you're having such inflation in natural gas prices, et cetera, et cetera. I mean, there's a lot of things that went wrong there for it to happen. I don't want to simplify the situation, but when you already have tinder that's very dry, it's much easier to start a fire. And natural gas was already going through the roof when this thing happened, and now you're finding people with rolling blackouts because electricity, there's not enough gas. It's just a mess. Right.
Also, I just want to remind you of something interesting. You may remember this because I actually talked to you about it a few times during the summer. I brought up a stock called Moody's. Do you remember that?
Yeah, the ratings agency.
The ratings agency. And my spiel was, I remember, like, you actually just you totally refreshed my memory. And I was talking about how instrumental that stock is going to be because of all the vulnerabilities with stocks and in terms of their junk bond ratings.
Yeah.
And how these rating companies are going to be huge, because if you give a stock a bad rating, that automatically lowers its valuation on an intrinsic basis because of its bond.
Right.
And we may be going a little too deep here. Possibly. I'm not sure.
I don't think so. I think, like, these things are they're the canaries in the coal mine that you look at when you're seeing things, being, our job as professionals, in my mind, is to look at things that nobody else looks at. Like,
Well,
I'm going to sit here and just talk about Apple's price all day. You can
no,
find
of
it anywhere
course,
on the internet, right?
of course, and also bring some, and also bring some sense of
Yeah,
understanding on these intricacies that are there. Let me
doesn't
ask
matter.
you, what are you thinking in terms of crypto right now? I looked at Bitcoin last night. It looked like it was ready for another move up. I'm very, to be honest with you, I always have an opinion on everything. I mean, too many things. I honestly don't have an opinion on this. I just don't know. I don't know, Jeff. What do you think?
I view Bitcoin like a venture capitalist would view an angel investment in a company that's doing well, and they have a little bit of exposure to it. I have a little bit of Bitcoin, nothing substantial, like really minute amount, but I
Yeah.
think everyone should have like a little feeler there. For the reason is that when you have a little bit, you watch it a little bit closer. But I don't trade it because I don't know how to trade it because it's not correlated to the rest of the stock market and it's totally insane. And you can't short it. And it's just like, so I just invested a little bit of money for the long term in it. So I watch it like a venture capital investor would watch an angel investment in an early startup. I know the technology is incredibly important. I know that there's a lot of really strong institutions. The thing you said like 2 months ago, which was like, big bells in my head, which made me buy some actually a little bit because I didn't have any. I had some and then I sold some and then I bought some back. But was when the PayPal came out and adopted it. I think PayPal, I've been saying this. We had a video like a few weeks ago where I thought PayPal would be the most important financial institution in the world. Guess what? That stock's up 27% year to date. A lot of people are starting to realize PayPal is the only bank that might exist in the future, or to some degree, et cetera. But I don't know Bitcoin's role in all that. I think that there's still this big, dangerous risk with Bitcoin's endgame. Whereas if they actually become competition to legal tender, you know, the governments don't play nice. Once they
Right.
feel threatened, they don't play nice.
Right.
They just shut things down.
Very
Right now,
quickly.
they don't really, the same way we don't know. I mean, it's not that we don't know what to make of it. We know what to make of it. The same way we're kind of just like non-decisive, good or bad. I think the feds are even less decisive until they have to be. And so we're starting to see gold fall out of bed. And we talk about gold and Bitcoin all the time. And another thing I agree with you, these are not things that trade conversely. They're not at odds. They're totally different assets. They're totally different animals. But you can't help but wonder, like, how much pain gold holders, and guess who owns the most gold? Central banks.
Right.
Are going to take until they start to do like insane stuff like outlaw Bitcoin.
Yeah, I have a very my theory on Bitcoin is very similar to, and I've mentioned this to you several times. I think we're in the internet in 1992.
Yeah.
Or maybe 93. That's where I think we are. I think that the idea of it is really, really amazing right now. Where it's going to have a big impact in the future of how people deal with money. But I think we're still in the infancy stage and we're trying to make heads or tails out of it. Very similarly to how the internet was, AOL, Time Warner, right around that, maybe a year earlier. I think we're there right now where where everybody's going to talk about it and then it's going to die out again. And it's going to reinvent itself inside of a tech where it's now going to be a mainstream thing. But see, if you think of it that way, it would be kind of hard for it to happen without the government being fully on board. And if the government's fully on board, then the beauty of Bitcoin, the attractiveness of it is completely diminished. So it's like all the fun stuff.
22. They need government adoption to go next level, but like the whole point of it is that it exists outside the purview of government.
Exactly. I was watching a movie. I still have some friends in Hollywood, and I get these movies before they come out in the movie theater.
Oh, cool.
Yeah, a few days, sometimes, not all, but some movies. So there's this movie coming out on. This has to do with Bitcoin. There's this movie coming out this Friday. It's called the Silk Road. The guy with the truth, the movie about it's coming out this Friday. And, I didn't really know the whole story. I just know that he's sentenced to 100-something years in a federal prison in Arizona or New Mexico, somewhere out there.
Yeah, for people that don't know Silk Road, it's that it was a bad website where you can buy like hitmen and this and that, right?
The dark web, the dark web.
Yeah,
cocaine, heroin, any drugs you want. Basically, you use the torrent, but you didn't download movies. You would make deals online to buy stuff, to buy and sell drugs, and then later it became for hitmen and so forth. So
bad place, yeah.
Whatever it was, yeah. But it's called the dark web, and the whole functionality of it, the thing that made it work, was Bitcoin.
Yeah.
You there would be you wouldn't have that without Bitcoin, because you wouldn't have the anonymity. So it was very fascinating, the kind of impact and what the impact of this Bitcoin and how it can be used it's eye-opening. It's one thing to talk about, but when you see this and you're like, oh my God, people are loving this. What they love about it is the privacy and anonymity of it. And then here you have this guy making a business out of it.
But that's why I'm so surprised. That's why I'm so surprised that they, like, everything under the sun is ultra regulated. Like, I can't say go buy this stock and then I bought it an hour before. And like everything in our financial world as financial people is ultra regulated, which is good. That's good because we're protecting people. People are being protected. It's important to have these regulations to a certain degree. But Bitcoin is the Wild West. If you want, your wife dropped outside of the supermarket bagging the groceries, or if you want to send money to Hezbollah, it doesn't matter.
Or hide money from the IRS.
Hide money from the IRS. Transfer money to the most nefarious people in the world. Pay hostages, whatever. You use Bitcoin, and they're letting this thing. It's fueling these things, and it's like, why? What's the upside for them? Why? Right. Why do they let it exist? Is the question that I keep wrestling with. Like, it's so obviously a competition to everything that they stand for: regulation, oversight. Why are they letting this thing exist? And then it's turning into like this big Ponzi casino, which everybody can't help but get involved in because, you want to make some money. That's why.
Right.
Like, why do I have a little bit? Because it's, people are in it.
Sure. Sure.
It's a flyer. It's what you call a flyer. But why are they letting it get to this? It's over $1 trillion in market cap right now, Bitcoin. And it's not a nothing burger. It's $1 trillion.
And the bigger it gets, the harder it's going to be for the government to come and put it back in its place.
But how big can it get? That's the point. People are like Bitcoin at 50, right? So if Bitcoin goes to $500,000, guess what? It's $10 trillion. It's like rivaling gold in size, which is what, like 15 trillion or something like that effect?
17
trillion.
Yeah.
Okay. The size, it's almost the size. It's what? Double the size of Japan's GDP. I mean, it's a massive thing.
It's a monster. It's a monster. Yeah.
So what do we do?
And how are you going to regulate the wealth of those people who got into Bitcoin? I mean, it's exactly what you're talking about. It's a nightmare on top of a nightmare on top of a nightmare for.
But it has some awesome aspects. That's the part that I don't like. This technology, like you said, like this digital currency that exists with complete history of transaction, yet needs no clearing, doesn't have to be held in a bank, doesn't have to have a custodian. The technology is the actual custodian.
Right.
That's so useful and so smart. It's so slick, it's so brilliant. That's undeniable in my opinion. At this point. And how can you deny how cool that is?
And my theory is the government, America, the rest of the world, China, Japan, we're going to figure out a way to implement it into our society on a responsible basis. My question is, how is that going to? That's the but the incarnation that we're dealing with right now. I think I'm telling you, Jeff. I'm going to tell you this 10 years from now, and I'll remind you of this. It's like the internet in 1993.
I predict what's going to happen is they're going to engineer a soft landing because it's going to be too big to fail. So they're not going to be able to say you can't use it. It's a nothing burger, and then watch people lose all this money. They're going to probably peg it to some sort of like new crypto that the treasuries of the world decide to invent together, and they're going to have a pegged exchange rate where they're going to say, okay, 1 Bitcoin equals one of these, and it's gonna be
an instant time, and it'll be in real time, of course.
It's gonna be a big haircut. It's gonna be an exchange thing, and after this date, your Bitcoins cannot be used on planet Earth, but before then, come to us and give us your Bitcoins and we'll give you our cryptocurrency.
But
I could see some sort of thing like that happening.
Definitely. Some type of a virtual bank where your crypto goes in and it comes out as viable. Right.
Doesn't that make sense? I've heard
Makes
rumblings
total
of
sense. That makes total sense.
But
That
what I
makes-
don't understand is why you need like 50 altcoins. Like this is just like,
This is
like, why
all-
do you need that?
You don't. You don't. So I think I think over the next decade, this industry is going to become bigger. Obviously, it's going to eat up the little guys, and we're going to see a lot more institutional, responsible, not retail, but commercial money, I'd like to call it.
Yeah.
Enter this phase and enter this segment of the economy. I think that's just inevitable. It's just a matter of time, and it's responsible. But one thing it's going to do, and the internet was, I think, the first part of this. Internet brought the world together. The world's becoming one. I think this is going to be cryptocurrencies, whether it's Bitcoin, whatever it's called, but cryptocurrencies are going to bring the financial markets together even closer than ever before. We're gonna have a lot less of the cross rates, cross currencies. It's going to be one giant global economy. That's where the world is going, and it for better or worse, it's going to create a stronger structure for the globe. Let's move on to another topic. What do you believe? What are you seeing on financials? Obviously, I'm talking about financials for many reasons. Number one, long-term bonds are falling. They're breaking down. There's obviously a big differentiation now and risk of inflation. And we talked about this last week. Short-term rates are steady. Longer-term rates are moving. And we have now, for the first time since February of last year, folks, pay attention to what I'm saying right now. We have now broken out. I think today or yesterday was the first day that financials broke out above last February's high. So they are in play now for the first time, as far as I'm concerned. What are you thinking, Jeff?
I mean, I feel like I've been beating the same drum. I feel like you want to be invested. If you're going to play financials, there are financials and there are financials. I think you're going to want to play the investment bank, Wall Street, trading companies. I think there's never been more attention on the stock market than there. Like, I don't know if you saw yesterday, Goldman Sachs announced that they have a subsidiary company within their bank called Marcus, which has been pretty much for loans. But now they're going to start being an investment advisor, Marcus, for lower account size. People that don't understand Goldman Sachs' business, they cater to the affluent. They look at ultra high net worth individuals, institutions, corporations, hedge funds. That's their bread and butter. But they want to get the retail trader now. They want to get the retail long-term saver now. So I think that's cool. I think that's an awesome thing, because for me, the guys they have working there are some of the sharpest people on the planet. So
Definitely
be able to get those type of strategies and I'm not talking about what we do. I'm talking about for like long-term advising, getting a nice portfolio that you're going to sit in for 40 years, 35 years, that sort of thing. I think it's cool that they're entering those places. So I love Goldman. I love JP Morgan. I love those stocks. But one thing I think is interesting is, the 13Fs. I know you're like a huge 13F guy.
Oh yeah.
Warren Buffett, who's always been kind of like a financial evangelist, or at least since the 2008, because they've been a value sector in the entire market, he left JP Morgan in the fourth quarter, which is interesting to me. That's something to think about from in terms of valuation. Longer term valuation standpoint.
Yeah. The way I'm looking at financials is very simple. And by the way, just to comment to what you said in terms of the direction Goldman's going to, and this is just a comment. I believe they got that originally. I saw Merrill Lynch going in that direction, going from the affluent to the regular guy. Starting a few years back, they started doing it with their research. They started doing it with their research department. They created a really nice research department for just the everyday guy. They lowered their rates and got into discount brokerage. And I think Morgan wants to get some of that market cap. But you're absolutely right. Regardless of the motive behind it, you're absolutely right. The way I'm looking at financials, I'm still going to continue doing what I started about 6 months ago. 6 months ago, I wouldn't even look at financials, but about 6 months ago, I started looking at them and I started separating. And you and I've talked about this many times, separating the company that deals with like the savings and loans versus everybody else. That has been very, very beneficial. That has been very, very beneficial because if you the financial sector is very different than tech and very different than most others, because it's really a combination of three different sectors. You have stocks that are extremely tied into interest rates. You have stocks that are tied into insurance, not even banking, and you have stocks tied into credit and private sector versus interest rate. So you have three completely different subsectors. So the way I did it was this: I would not move into any ETFs because they obviously held the broad exposure. They had all three, and I didn't want the savings and loan. But I loved stocks like Discover Card, and consumer banks. Let me actually tell you some of the stocks that I've been looking at. I was just looking at them before coming on here, and you tell me what you think of these. Where are we? Here we are. And I'm looking at my relative strength. Discover is all the way. It's like number 3 and 5 right now. But I like this one, SVB Financial.
SVB, yeah.
Yeah, SVB. And I like IVZ, Invesco, IVZ. Those are moving up right now on my relative strength scan, substantially above other financial stocks, those three. Nice. So if anybody wants to look at financials that are really breaking out, my recommendation is to separate them into the savings and loan, the insurance, and see what the company does instead of just putting everything into one blanket. Let me ask you another question. What assets, stocks, what's your game plan between now and next week? What are you looking at? We got a lot of Fed data coming out. We got retail sales actually already came out about 20 minutes ago. We got jobless claims. What's your strategy? Earnings are coming to an end. What are you looking at between now and the next 7 days or so?
I'm cautious the next 7 days. I mean, I was looking at the best performing subsectors in the S&P 500 this year since 2021 started, and one sector that I've been like really hot on has been the semiconductors. Guess what? They're the third best. They've been up 27% this year. Oil and gas is up 24%. I feel like a lot of these moves are getting a little bit stretched for such a short period of time. And you're still seeing some weak sectors. You're seeing internet services down 7% this year. Household products, you've been talking about this, consumer staples down 7.7, soft drinks down 8, wireless is down 9. It's the worst sector in the S&P 500 this year.
Yeah.
And so I'm looking at a market that is kind of like bumping up against technical levels on the upside. I think we could see a pause. We're looking at a little bit of a pause this morning where you're seeing a little bit of selling. We had a mixed tape yesterday, which we haven't had in a while, where the NASDAQ was actually down and the S&P was slightly up. And so I'm starting to cool. When you start to see the first little bit of pullback after just like such an extended period, I have this fade system, trading system that I'm launching in the coming days. And I'm looking at things getting really stretched for that system. And I can't tell you how many stocks are up 7 days in a row, 8 days in a row, 9 days in a row, 10 days in a row, really, really stretched away from the moving averages and stuff. So when you start to see that, I, by nature, always start to think that you might get a little bit of reversal in some of this stuff. So if you're looking to momentum trade, ride those things, give it a minute. Give it a minute. Maybe put in a little bit of size. If you're looking to trade the high flyers of this year, you get your first pullback. Don't go all in. Put a quarter of the position you want to put in when you're trying to get your feet wet. Because when you got up 27% in a straight line, a 1% pullback is not a pullback. A pullback, you should expect a 5% to 10% pullback on a 27% move. Just some food for thought for people out there to think about. So market here is getting a little bit tired. Yeah, I want to wait to see what happens. I still like cannabis. I think they got oversold last week. I still like miners. I'm still bullish on the inflation trade. I don't think the Fed's going to be able to get that under control.
Right.
That's where I'm at.
I couldn't agree with you more. Sentiment levels are extremely overbought right now. Yeah. P ratio is running away from the S&P 500 at historic levels. Momentum levels are at 11-year and 20-year highs.
Yeah.
The divergence is I've never seen divergence I have, but probably one of the highest divergence I've seen on the S&P. I've been telling my guys to be very, very cautious, to be increasingly defensive, not to put all their eggs in the market right now.
Right.
Separate things with ETFs, take 50% of positions off, take profits off the table, pot stocks, electric vehicle, basic material stocks, and so forth. The low hanging fruits, so to speak.
Low hanging fruits.
Well, I'm glad you see things the same way. Before I let you go, do you have any interesting pair trades that you want to give us or tell us, or anything you closed out, just to give us some food for thoughts of where you're looking right now specifically?
Yeah, I mean, I'm still of the opinion. I gave you one earlier when I was talking about the bonds. I'm looking at Treasury. I'm looking at Treasury yields are going to go a little bit off, but I think junk bonds are going to get hit. I think they're going to get whacked in the coming days, weeks. So I put on a pair long TLT, short J and K.
Got it.
Today. Come out today.
Really?
So,
okay.
Yeah. So this is as fresh as I've ever given for our free crowd. But by the time this is aired,
it's a great trade.
You're
taking advantage of the curve, and you're taking advantage of the curve, and you're taking advantage of the curve using. I'm
a contrarian in certain time, as like for good like short-term swing trades. I like to be a contrarian when things get like absolutely ridiculously stretched, and that spread has never been where it's at. So I'd like to nibble a little bit on the other side of that, see what it's worth.
Love it. I love the idea. I really do. Yeah. I think it's a great idea, and I think it's going to do well. I'll keep my fingers and my toes crossed.
You got to stick your neck out there every now and then. You can't.
Of course. And especially with the market being a little uncertain right now, you're kind of moving away from it a little bit, which is really a smart idea.
The difference between companies and governments is companies still have to make money in the real world. And the second aspect of being a junk bond rated company, other than having too much leverage, is you have a shitty business that needs to borrow a lot of money. And a lot of these businesses haven't rebounded. They've been speculated on that they're going to rebound, that there's going to be this buoyancy. But if you look at their actual revenues, a lot of these companies are down 25 to 50% year over year from pre-COVID levels. So I don't know. You tell me.
No, you're absolutely right. I like the trade. I like it. And I love our sessions, Jeff. I did too. It's one of my favorite times of the week. I get a chance to get inside your head, get to see if I'm doing something that's crazy or not, kind of a checks and balances. It's great to have it.
I love it. I totally enjoy it. It's good for my process. It's good for my trading. It's good for my research. It's good for everything.
Me as well. Folks at home, if you're interested in hearing from Jeff, if you want to ask him a question, if you want to get some confirmation on anything we've discussed today, please feel free to do so. We don't bite. It's jeff@joyofthetrade.com. That's jeff@joyofthetrade.com. If you want to reach out to me, I use my old email address. I've used it for years. support@marketgeeks.com. It'll get to me very, very quickly. That's jeff@joyofthetrade.com or support@marketgeeks.com. Jeff, it was a wonderful session as usual, and I will talk to you throughout the week. Have a wonderful day ahead.
You too, Roger. One last thing, guys. Subscribe to our YouTube channel. If you like this video, if you came to this video from YouTube, we make a lot of videos like this. This is the best session, in my opinion, but we have a lot of really good videos that we have on our YouTube channel.
Thanks for saying that. Right. That's right, folks. Make sure to like this video and subscribe to this channel if you're watching it on YouTube. Stay ahead of the market by being the first to be notified when we post new videos. Love it. Bye, everyone. Bye, Jeff. Take care, buddy.